Africa's new economic environment themes this year's Africa CEO Forum in Geneva, Switzerland. Over 800 decision makers from Africa and around the world are tackling this. We will have the latest. Another trading week begins and Global Business is bringing you all the latest developments on the business front from within the continent. Hello and welcome to the show. I am Penny Nakaribe, live in the Kenyan capital, Nairobi. It's 9 p.m. here in East Africa. Once again, thank you for joining us. Coming up tonight, Japanese investors show increased appetite to put their money in Kenya, and preserving culture through luxury, a blend of Spanish leather with Nigeria's aso-oke. Access to the internet is playing a big role in connecting Africans with the rest of the world. Internet penetration across the continent is one of the items on the agenda at this year's Africa CEOs Forum in Geneva. The meeting started Monday and is expected to look at a range of issues affecting business on the continent. At least 26% of Africa's 1.1 billion strong population now use the internet or some sort of data application. 90% of that is done through mobile phones, with phenomenal growth in online banking and shopping. Sumitra Naidu takes a look at how businesses are dealing with the growth demand for internet services.
Access to the internet is becoming as vital as basic services like water and electricity. Demand for internet applications and services are growing as more people in Africa gain access. Businesses have realized the opportunity and are now constantly looking at ways of using the internet to best service these needs.
If you segment the market and you target the segments effectively, it's one of the best ways you can reach people. It's a very cost-effective way of marketing, and also you tend to find that the internet users typically are early adopters relative to the rest of the population.
Mobile phones have been the main driver of this digital revolution, more especially for people living in remote areas.
In South Africa and also beyond South Africa into the rest of Africa, their first connection with the internet is going to be through a mobile device. So are you reaching your people through their mobile devices? If they connect, can they find you through their mobile devices? Can they interact with you through their mobile devices and the internet connection that provides?
Over 50% of South Africa's population is using the internet. E-commerce has grown significantly in recent years. The online shopping industry is estimated to be worth around $250 million. South Africans are also overcoming their concerns about the safety of online transacting.
Banks in particular are doing a great job of reaching people via the internet and now through apps as well. The banking apps in South Africa especially are world-class apps. So you're finding a situation where people don't have to go into a bank anymore.
Globally, there are 3 billion internet users, and according to the International Telecommunication Union, 2/3 of users will come from the developing world. Nigeria leads penetration in Africa. Egypt, South Africa and Kenya trail behind. Increased internet penetration will depend on infrastructure development.
The preoccupation of every African government should be access to the internet. How do we improve and get everybody connected? If we look at growth around the world, where there is prosperity, there is ample access to the internet.
Back in 2011, the United Nations declared access to the internet as a human right and said it was an important tool for sustainable economic growth. Global research group McKinsey estimates that the digital economy in Africa could grow more than 10 times in the next decade and add over $300 billion to the continent's GDP. Sumitra Naidu, CCTV, Johannesburg.
Over 500 chief executives, business leaders and policymakers are gathered in the Swiss capital Geneva for this year's edition of the Africa CEO Forum. Africa's economic outlook as well as the new economic environment are subjects of debate, with participants discussing the continent's competitiveness and what partners are required to achieve accelerated rates of economic growth. They're also tackling challenges and opportunities posed by urbanization and the impact of technology in business. CCTV's Beatrice Marshall is at the forum and now joins us with the latest. Beatrice, what emerged on this first day of the summit?
Well, Penina, indeed, as you rightly put it, some 800 decision makers are meeting here to discuss Africa's new economic prospects. Well, they are talking about Africa being the new frontier, and that has been growing over the last 5 years. There are a few issues here on the agenda: the challenges of urbanization, and particularly the opportunities that the private sector can tap into due to that urbanizing of Africa. There are also other issues like making business much easier, doing business in Africa. Other issues also being considered here: the role of women empowerment, all topics of discussion here on day one of the Africa CEO Forum. Well, many here are bullish that the economic growth average 5.5% will be maintained over the next 5 years. Well, the Donald Kaberuka, the president of the African Development Bank, did say here this morning that Africa actually has the potential to achieve a 7% economic growth rate this year, if only they can fix issues of infrastructure, its energy problems. That can propel Africa's growth even much further. Well, it is really a private sector affair, and CCTV's head of business, Africa, Noel Makugu, is here with me. Noel, it has really been a private sector affair here today, but what are CEOs, though, saying about Africa's economic prospects?
Well, I can say that just like generally what they're saying, it's very optimistic that Africa is really going to achieve this growth. But some also are also cautiously optimistic about the situation. One, they argue that Africa is getting its act together. Infrastructure development is moving quite across. Like you mentioned earlier, the way of doing business also in Africa is getting even much better. But however, there are still concerns about political instability. There's still some parts of the continent that are actually not getting their act together. They're getting slow, and there are also barriers of trade. These are some of the issues that have been debated here. But generally, I can say it's a cautious, optimistic situation among the CEOs here.
All right. The African Development Bank President Donald Kaberuka did mention here this morning that Africa does actually have the potential of getting up to 7% economic growth rate on average in 2015. Out of these discussions, do you see that situation, though, as being likely?
The situation, yes, it is likely that that is going to happen. But generally, the situation is like trade between Africa is also still not opening up. In May, it is expected that there will be an announcement in Egypt where there will be a bigger free trade area zone bringing together the SADC region, the East African, and the COMESA. That's one big step towards that goal of achieving this growth of beyond 7%. But also, some argue that the environment is not very clear. Doing trade within the continent is not quite certain. And also, there's an issue of security. In the West, there's the Boko Haram and the jihadist movement. And then again, that is painting a bad picture, the dark picture of Africa. Once a situation is in turmoil, then it's like the whole continent is carried out in that kind of scenario. So if you speak to CEOs here, they're trying to break that misconception that has been in Africa, and they're looking at marketing their diverse abilities across the continent. That's one way towards achieving that growth and maintaining it. However, there are also situations whereby there's concern about power generation right across the continent. Not many African countries can maintain that kind of production for talking about industrialization, yet not all can produce enough power to support these kind of systems. That is one thing that has really come up at this forum, and they're looking at governments and also the private sector involvement into this process. They argue that the disconnect is quite wide, and something has to be done to bridge that gap.
All right, intra-Africa trade also coming up here at the forum, still quite low across the continent at just 12% of trade. What issues or what measures are CEOs coming up with in order to boost further intra-Africa trade?
I think one confession that I've had today, and certainly is the case, is that apart from the governments not knowing who is doing what, also the CEOs themselves don't really quite understand. Big corporate companies across the continent don't understand, for instance, in East Africa, don't know what the West Africa is doing. Southern Africa doesn't know what Northern Africa is doing. So that's one also major disconnect. So in terms of investment opportunities, it happens that these regions in Africa, with all their diversity and ability, they are not cross-marketing. So that's one scenario that has to be broken. That's one case that they are looking at, crossing over the government and the CEOs themselves, getting it together and building on those blocks that are actually potential for Africa. For instance, the dynamics as they are at the moment, it's like in the West and the Asian continent, the population, the working population is reducing. Africa stands out as the continent that has got a bigger population of the youth. So they argue that that is one potential that Africa should tap on, because in the years to come, there'll be the issue of driving industries in the continent. It stands a better chance of tapping into this demand across the globe.
All right, Noel Mokubu will be following that for you tomorrow as well. The Africa CEO Forum 2015 continues up to day 2 there, and most of the African CEOs here, of course, are talking about the next 5 years and how Africa can tap and ensure that its impressive economic growth continues throughout the next 5 years. Penina?
Oh, interesting discussions there, Beatrice. We'll definitely be linking up with you and the entire team tomorrow for more from Geneva. Beatrice Marshall, thanks very much. Kenyan President Uhuru Kenyatta has challenged Kenyans and the Japanese to engage more in joint ventures to reverse the trade imbalance that heavily favors Japan. Kenyatta said Japan should increase its imports of Kenyan flowers by dealing directly with Kenyan investors as opposed to going through European auctions, which leads to delays in getting the flowers to the market. The president was addressing the Kenya-Japan Business Forum in Tokyo as he concluded his 5-day visit to Japan. Japanese business leaders expressed increased appetite to invest in Kenya, citing the conducive business environment. Trade between the two countries grew from $557 million in 2008 to around $1.1 billion in 2013.
In the recent past, Kenya has also discovered oil and gas deposits, and given the economic importance of the sector, we also invite Japanese investors to invest in Kenya by going into joint ventures with Kenyan companies or through public-private partnerships. Kenya was the 9th largest economy in Africa. We are 9th, but the only non-oil producing country. Non-oil producing country. Basically focused on services, manufacturing, and industry. The entrepreneurship of our people, pretty much the same as Japan has developed her own economy.
Let's turn our attention to the stock markets, and South African stocks ended higher on Monday as traders chased after bargains after the main indices suffered the biggest weekly drop of the year in the previous week. The blue chip JSE Top 40 index was up 0.72% to 46,202, and the broader all-share index rose 0.66% at 52,139.15. Still ahead and masking the Bitcoin, the internet currency that is yet to make inroads into the continent. And the price that Egypt needs to pay to realize the $36 billion worth of investments pledged at the Sharm el-Sheikh summit.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast changing African business landscape. We take you where the business is happening.
Global Business, weekdays at this time on CCTV Africa.
You're watching Global Business. Welcome back. The Bitcoin is being touted as the next wave in moving money between the developed world to Africa. But the internet currency remains a mystery to most people on the African continent. And as Angelo Coppola reports, there seems to be reluctance to accepting it.
Virtual currency doesn't seem to have found a place in South Africa just yet, despite an entrepreneur introducing Bitcoin into the country late last year.
Well, the thing about Bitcoin is you've got to separate the technology and the potential for the technology from the hype that's surrounded. It's like any new technology. It arrives just like the internet, just like smartphones, just like cell phones. It's going to change humanity. It's going to change everything. We are going to have a better, more fulfilled, enriched life, and we'll be able to pay for it quicker and easier.
The fast-moving consumer goods sector is a case in point, where customers are concerned about personal security. Transactions, though, are going cashless, and business owners have noticed the move.
98% tech, 2% cash. People seem to be moving away from carrying cash on them these days. It's pay by card or mobile payment app. That's pretty much the only options that are happening at the moment.
The retail sector is only coming to terms with mobile applications now, being driven there by consumers who have already adopted the technology.
The only problem is everybody you speak to in the Bitcoin industry seems to have drunk the Kool-Aid, and there's a lack of realism about what is and what isn't possible.
I've been balancing it backwards and forwards through my mind as to how it would be beneficial to bring it into the sort of a facility, and I don't see how it would fit in, how it would work. Maybe if I was a tab betting agency and it had something to do along those lines, a feature to the business. For us, we are more about, providing people a comfortable place to use their tech.
But that's not the only challenge. Currencies swing wildly depending on a range of factors, and Bitcoin is no exception.
And its biggest impediment, unfortunately, is its wildly fluctuating exchange rate.
The jury is still out in terms of Bitcoin and whether it's going to take off in South Africa and in Africa for that matter. It all depends on how consumers perceive the ease of use. I'm Angelo Coppola for CCTV in Johannesburg, South Africa.
Egypt secured investment deals worth $36.2 billion at the three-day conference that just concluded at the Sharm el-Sheikh resort town. Saudi Arabia, Kuwait and the United Arab Emirates pledged $4 billion each, while British Petroleum and its Russian partner DEA pledged $12 billion in Egyptian gas fields on the West Nile Delta. The agreements that were ratified include a $3.8 billion power deal with German conglomerate Siemens and a memorandum of understanding with the United Arab Emirates company for the construction of a new administrative capital.
Direct investment contracts were signed, including engineering, producing, construction and loan deals from funds and international institutions. God willing, they will be carried out.
Let's get more details from CCTV's Yasser Hakim. He joins us live from Egypt's capital, Cairo. So, Yasser, Egypt was targeting deals worth $20 billion to be signed at the investment conference, and it exceeded that target. What's the general sentiment amongst Egyptians about this?
Well, Egyptians are very optimistic. They were satisfied with the way the conference has gone. There was high viewership of every day in the conference. It was very well monitored by the Egyptians, hoping that this will be a milestone, a turning point in the transitional period, and maybe would take Egypt on a higher level now of economic development that's badly needed after 4 years of uncertainty. But there's also now some kind of monitoring, waiting to see if all these deals that have been signed or MOUs that reached more than $70 billion will be put into action. Will they be implemented in the way that they have been promised by the government? Will Egyptians bear the fruit of these results, of these contracts? And that's what Egyptians are hoping for.
There were areas such as real estate that were seen as prime areas for investors. But in the end, Yasser, which were the key sectors that investors put their money into?
Well, other than real estate, the big moneymaker was energy. Egypt is suffering a lot from energy crisis. And many, if not most of the deals were in the energy sector, and energy sector in its different forms. You've got the oil and gas sector, like you just mentioned, the BP $12 billion agreement, Eni, the Italian company with $5 billion, and others as well with smaller numbers, but those were the major two big ones. That's for oil and gas exploration and concessions. Then you've got the power stations, deals to build construct power stations from the United Arab Emirates, from China, from Saudi Arabia, from Germany, because to generate electricity. And then you've got the renewable energy sector as well, which also had its form in the conference. And China had a big say in it as well, with contracts and MOUs to build solar energy companies, and also to build the wind powers. So those three sectors of the energy were the highest in the market after the real estate, which was also the biggest moneymaker that day. Then you've got the transportation, where China is going to build the first high-speed train in Egypt that will cut from the north to south, from Alexandria all the way down to Aswan, cutting the whole country down, and that will be a mega project that will be at least $10 billion. That will cost $10 billion. So those are the main sectors that benefited from the conference.
And yes, sir, Egypt also won $5.2 billion in loans from international institutions. Under what conditions was it granted these loans, and where is the money likely to be put?
Other than the money that was pledged from the United Arab Emirates and Kuwait and Saudi Arabia, the 12.5 billion, which were 6 billion will be put in the foreign reserves and the rest in the budget. Those 5.2 you're talking about were from the World Bank and the European Development Bank, the EBRD. And those go mainly into agricultural products, which did not really benefit a lot from the conference. So that was something positive for agriculture. Egypt needs a lot of agricultural products to be implemented here. And also infrastructure projects such as sewage system, developing the sewage system, developing roads. Those are like 4 and 5 year loans with low interest rates. We've not been told the interest rate, but the exact number, but we're told it's going to be low interest rates and over 5 years to be received, and grant, and could reach 10 years in repayment. So those were basically the products that will be funded by the World Bank and the EBRD over the $5.2 billion.
All right, Yasser Hakim, live for us in Cairo. Many thanks. Now, a quick check at commodities. And U.S. oil output could start to take a hit by late this year due to low prices. OPEC said on Monday, suggesting the exporter group will have to wait beyond its next meeting in June to see if its strategy to defend market share will dent the shale oil boom. Now, the halving of oil prices since June last year has prompted spending cuts by oil companies and a drop in U.S. drilling, raising expectations of slowing output in countries outside the Organization of the Petroleum Exporting Countries. And coming up, a young Nigerian fashion designer that is preserving Nigerian culture by combining Spanish leather with the Aso-Oke fabric. Young Nigerian fashion designer Kunmi Otitoju is preserving Nigerian culture by combining contemporary Spanish leather with the Aso-Oke fabric to produce luxury bags, wallets, and other fashion accessories. Handmade in her Spanish workshop, she also visits Nigeria often to work from Lagos and sells her products at high-end stores in the country.
From her home in Nigeria's bustling city of Lagos, 30-year-old Kunmi Otitoju is adding the final touches to her latest collection of handmade bags. The collection is part of Minku, Otitoju's high-end Afrocentric brand that produces luxury bags, wallets and other fashion accessories for men and women.
The main thing is having the idea of how to take things that we are used to seeing every day around us that form part of our culture and turning them into something with a broader appeal. And because we already have a lot of things that are made in Nigeria, not on a high scale, and not on a grand scale, or not on a mass or global scale, but there are things that if we see a way of translating them into something that is a bit more marketable, a mini industry can actually be formed around those things. For example, Ashoke, everybody knows it as what Yorubas wear for their Ashoebi wedding and all that.
Otitoju has a degree in computer science, but fine art and design is her first love. She trained in Spain, then returned to Nigeria to start her business in 2011. All Minku's products are handmade at a workshop in Barcelona, Spain, and sent to Nigeria, where the Asooke is hand-sewn inside the bags.
We've had a whole range. We've had people who have really liked the bags, you know. They like the hand-stitched quality of them, you know. They also like some of the treatments that are done to the leather. She has this really nice sort of wave effect, like a kind of ripple on the leather, that a lot of people have responded well to. And then we've had people who feel it looks a bit too handmade, you know, because I guess there's this Nigerian thing that we want everything to be very clean and very neat, you know, like very machine done.
Minku bags sell for between $400 and $7,500 for the larger travel bags.
They're unique, basic. You hardly can find the design elsewhere. And then if you don't want anything common, you go for it. It stands out. People keep to ask you, where did you get it from? Where did you get it from? And when they go to the market, they don't get it. Minku, very, very unique.
In 2014, Otitoju was listed by Forbes as one of 30 promising young entrepreneurs in Africa. Minku bags are also sold in Spain, Canada, and the United States. Famida Miller, CCTV.
A quick look at the foreign exchange market. Nigeria's naira traded within a range at which it has been stuck for almost a month on the interbank market, supported by dollar sales from the central bank and oil companies. The naira closed unchanged at 199 naira to the dollar, while it traded at 224 naira against the greenback at the parallel market operated by Forex Bureau agents. On Global Business tomorrow, we stay in Geneva for the Africa CEO Forum. And 3G mobile internet penetration to increase 3 times over in the next 5 years in Africa. We'll have the details. And that's it for tonight's edition of Global Business. To send your feedback to globalbusinessafrica@cctv.com. Visit us on Facebook, our page is CCTV Africa, and stay in touch with Global Business on Twitter using the handle @CCTV News Africa. I am Penina Karibe. Thanks for watching.